Hey everybody, Boris Schlossberg from VK Forex. Welcome to our weekly Forex technicals for 414 through 419 of 2013. Of course, the big story as we close out the trading session on Friday was has dollar yen made a top for the time being. As always, past performance not indicative of future results. Trading Forex carries high level risk, may not be suitable for all investors. High degree of leverage can work against you as well as for you. Before you decide to trade any such leverage product, you should carefully consider investment objectives, level of experience and risk appetite. Possibility exists that you could sustain a loss some of your initial investment, and therefore you should not invest money you cannot afford to lose. You should be aware of all the risks associated with trading on margin and seek advice from a financial advisor if you have any doubts. Information including commentary trading deals provided by Forex.com should not be relied upon as substance of research. It should be performed for making investment decisions. VK Forex LLC and Com are merely providing this information for your general information. The information and opinions presented do not take into account any particular individual objective. Investment objectives, financial situation, or needs. All investors should obtain advice based upon their unique situation before making an investment decision. They should tailor trade size and leverage according to their own personal risk appetite. We're not responsible for any losses incurred on investments made by readers or clients as a result of any information contained here. It would not render investment, legal, tax, or other professional advice. And if such advice is needed, please seek services of a competent professional. Well, of course, I think the first order of the day is the yen. So let's take a look at this because we've been talking about this pretty much all week long, and of course today the fall came to fruition. If we go back to just the 4-hour charts, it becomes very, very clear in retrospect. And of course, everything always becomes very clear in retrospect. But this was a top that was unfolding. Of course, the 100 level was the key. Sorry, let me just make this a little sharper here. The 100 level was the key breakout level that everybody was focused on, and perhaps that's the reason why the yen just could not break through that level, because there was just so much attention and focus and probably capital forced on trying to see if they can push it through the level. We failed here once around 99.65. We failed here twice around 99.86, and what was probably most disheartening was that we came up to like 99.94 in North America session yesterday, and then failed and traded off the highs. What got kind of interesting after that, and I think this is worthwhile to kind of look at it as an anatomy of a trade, is that once we came off the 99s, the key level first was the 99.50s, because Asia gave up 99.50, and once Asia gave up 99.50, you could see kind of the writing on the wall. You see it right over here. This is hourly charts. Asia gave it up, and then it started to trickle lower. And of course, the really big level that we've been talking about all week long, and the level that really gave back everything, was this 99, because basically the yen was trading 99, 100, and once we broke the lower edge of the range, basically that's when the waterfall came off. That's when the trade started to really come off. Now you notice, by the way, the first couple of tests of the 99 around 6-7 o'clock got bought, right? But it never violated the higher end of it, which is 99.50. It never came back up and sort of rebuilt itself. And then, of course, once the U of M came out, that dropped much lower. And then at the end of the day, we had all sorts of shenanigans with the release of the U.S. Treasury report that suggested that sort of really tried to brush Japan off buying foreign assets, and it had a little bit of a further downdraft. Now, from a technical point of view, I think what's interesting here is if you let me just get rid of all the lines. If you really focus, what is really the key operating event technically? It's this level here, right? So this was the gap open on when was this? This was last week, right? The gap opened last week, and as we sort of rallied all the way through this, the gap has not been closed, right? With the gap open was around 98.15. We kind of tested this at the 4 or 5 hour in the New York session, but to really kind of excuse me, close the gap, it needs to come back down to 98 for real. Perhaps maybe during Tokyo session on Monday, perhaps a little bit later in the week. And it really comes back here. Where's the highs here? This is 97.82. Basically, 98.15, 97.75. That whole zone probably is going to need to be explored in order for us to kind of complete the distribution cycle. After that, it's really going to be open season. It's going to be interesting to see if we can re-rally and get more juice. But just as I think 99.50 was a key kind of a first waterfall level to the downside, it's going to become the primary level to the top side. In other words, even if we sort of consolidate and start to begin to rebuild, and they take out 99s, that's really not going to be enough to created a positive technical structure. What you really going to need to do is take out 99.50s, because only then will you probably have enough momentum to perhaps make a fourth run at the century mark if we have a positive scenario developing. But for now, the scenario is clearly negative. We're clearly trying to fill this gap and trying to see if we can sort of find buyers. The key question, of course, is I'm going to find buyers in the 97.75, 98 zone, or is this going to unwind very, very sharply, as yen trades sometimes very much do? Now, the other trade I think that's kind of really interesting to look at, and I think this is just unbelievably frustrating probably to a huge amount of bears, because if you look at this chart, what really kind of jumps out at you, this is just dailies, what jumps out at you on the Euro chart is just how bullish this chart looks. I mean, there is just very little reason to want to get bullish fundamentally Euro, but what the chart is screaming is that it's getting bought. And not only is it getting bought, it got bought here, of course. You know, we talked about 27.50 a couple weeks ago as the key level that got bought, and that signaled to us this extension move here. But what is perhaps most interesting is the fact that it got bought today at the 30.50 with a vengeance. And really, the bias now, unless proven otherwise, basically, unless we come back down and break down through the 30.30s, the bias is to the upside, because this whole value proposition just got bought very hard. Of course, the breakout zone here is 31.50. That's really going to be critical. That's been sort of the gap fill that we've been watching from a long time ago. And if it takes out 31.50, it really opens up a path towards a move all the way out to all the way out to 34s. I would say 33s if you want to be a little bit conservative. But there's just nothing here to stop it from basically creating a very, very strong U-shaped bottom. So near term, Euro looks surprisingly strong. And a break of 31.50 with conviction really does puts us, on a path towards the 33s. If we turn back down, it's only if we break the lows here, and violate that this becomes then sort of a distribution top, and then a fresh negative bias comes in. So those who are short are going to find themselves, I think, in an interesting position going forward. The techs are just screaming a buy, even though fundamentals certainly don't have any positive momentum behind them. Cable just consolidating. Not much going on here. Cable elevated itself through this 52.50 level, and now is really, the thing about cable that I think is kind of interesting is that it's a very stutter step process for cable. Basically, if you look at it over the last couple of months, what you see is a tendency to happen is it takes out a key level, then it just basically sits there for a while. Sometimes it tests up, tests down, tests up, and then it comes back and takes out another key level. So the key level here, when we recovered off the spike lows, was the 51s. We took out the 51s or 52.50s. We kind of hung out. Then we took out the 52.50s. And we hung out a little bit until we consolidated, and now took out the 54s. And it looks to me like the 53.50, 54s is where we're kind of consolidating here. So it means the 52.50 on the bottom end of the range, 53, 54.25 on the top end. But the real breakout level here is going to be 53.50, which puts us, 54.50. I'm sorry, 54.50, which puts us basically on a path towards the big 55 level, which is where we really fell out of bed at the beginning of the year. So it's one of the frustrating parts about cable is if you're trying to kind of time it, it really can whipsaw on you. So you either try to buy the low end of the ranges and stay with a bias, or you just have very, very large stops and you just ignore the intraday noise and let it happen. Another interesting development, I think, is that the Aussie kind of died. And I think this is surprising, but it also says that perhaps the risk is flashing a little bit of a red. Now, remember, Aussie has just definitely gotten huge amount of flow off the carry trade. So it kind of goes hand in glove. If you get yen liquidation and yen cross liquidation, the Aussie is going to feel it probably the most because it was the primary beneficiary of the yen acquisition. And I think what you're seeing here, just from a technical basis, is kind of a fizzling out of this 105.50 level. 105 still holds. 104 is pretty solid support, and 103 is very rock solid support. But once you start coming back into the range, it really becomes this kind of a range-based trade that ultimately distributes all the way down there. There's a lot of sort of new fundamental analysis that basically is claiming that the Aussie is going to get its comeuppance, and it might get its comeuppance quite soon. What you see from a technical point of view is essentially a triple top right now. This 105.50, very, very sticky. 105.50, 106 is a very, very sticky area. And certainly if you're a range trader or if you like selling tops, buying bottoms, this is a very promising and attractive reference point in terms of trying to trade this to the downside. Support, as I said, first comes to 104.50. If it slices through there, then support really is going to be very hard, very strongly tested at 103.50. I don't think it's just going to go into a vertical tailspin, but it certainly looks like it's distributing slowly but surely to the downside. And today was the first sign of this new cyclical weakness in the Aussie. It's also obviously, I think, going to affect all the other calm dollars. So you see the kind of cyclical weakness in the Kiwi had a very parabolic move, which means that it could have a similarly parabolic correction. So 86 got taken out, then we came back down, and I think now is a critical thing. If it comes back down to 85s, it will have basically a move towards 85s and a breakthrough down to 85s. Really kind of opens up a path towards the back to the base of the 84s, and it creates a very, very sharp correction to the downside. Lastly, how's the caddy doing? The other calm dollar, of course, that actually is performing better, I think, in many ways than most of the other calm dollars. It was a laggard, last couple of weeks, and it may be the front runner, leader amongst the calm dollars going forward, which, by the way, actually creates an interesting thought here. So yeah, I mean, the caddy, obviously you see, 103s was the top, 102s are now the new top. The 102 is the new top. If it doesn't get violated, the trend essentially is pretty much to the downside. 101 got tested. 101.50 is sort of the new topside cap, but this 102 is a pretty strong cap. This big reversal off of very bad news. Not this Friday, but a week from last Friday when we had the NFPs, gave you a very good signal that the strength of the flow was to the downside, meaning pro-CAD. So if you look at the idea that the Canadian dollar may be coming into a period of relative outperformance, then this trade, which has just been brutal for anybody who wanted to go short, may actually be setting up as an interesting short now. It's effectively a double top. It's really not that far from the highs. Where are we at? It's 107.14, so it's 75 points from the highs. It's a relatively decent risk reference point, and it certainly has the potential to kind of distribute to 105.50s if you get to see Aussie weakness caddy relative strength over the next week and a half or so. And that's pretty much, I think, how the week shapes up. I wish you guys the best of luck and the best of trading. I'll see you guys at BK and into our webinars. And as always, I welcome all your comments on Twitter. This is Boris Schlossberg, over and out.